Hey everyone, it is Jay Soloff from Investors Alley, and this is our Options Trade of the Week. So I'm at marketchameleon.com looking at the unusual options volume, and you can see even though it was a small volume day, generally speaking, a short day in the markets for the Thanksgiving holiday, there's still plenty of unusual activity going on. So if we were to sort this by volume, we'll probably see some bigger names up here like Home Depot, UNG for natural gas. So the one I want to look at here, U.S. Steel, which is at the top of the list. What happened today is that they announced a plant that has to be closed because of flooding. So this is the sort of opportunity that makes for a good short-term trade, because while a plant closing, if it's temporary, will impact the bottom line, what it usually does is it just delays profitability or delays sales rather than cancels them. So stock's down 6%, but almost certainly they'll be able to make up whatever they lose from this deal once they reopen the plant. So, and you can see that actually most of this activity was calls, 60% calls versus 40% puts. So probably a lot of people thinking the same thing, and we can take a closer look at it. And if we go to the trades here, we can look at, let's sort it by quantity once it comes up, and we can see what some of the bigger trades were. So this one looks like someone was rolling out some short puts to February. So they obviously feel that they're comfortable moving this trade out another month, so probably sort of along the same lines that they feel that it may take a little bit longer for the stock to go up, but that there's still a floor because they're selling puts and they just want to give it a little bit more time. Let's look at some call trades. You can see a bunch of smaller but still pretty big, 400, 500 lots. Looks like anything in December here. Buying some December 13s, the stock's at 13.12. Buying some December 15s. You're buying some December 6th, 13. So a fair amount of people purchasing calls, which is what you might expect to see. But I think this big trade here, that someone's comfortable still selling puts, would show you that they're not overly concerned about the stock plummeting beyond 12. They did move it out to February, probably just to give some extra time because of this flood. They want to give some extra time. This one is also a put sale, looks like in April. I don't think this is a rolling trade that we can't see the whole thing possibly. But if this is just a single trade, then someone, again, taking this opportunity maybe on the stock drop to sell some 11 puts. So there's a lot of belief that there's a floor here in this stock, 12 or 11 in this range. So probably taking advantage of some volatility going up because the stock is down, but short term, almost most likely a short term deal. Based on this plant closing. So you could see that for the most part, this option activity tends to support our thesis that stock is probably not in big trouble over the long term, at least not below this 12 or 11 level. So sort of trade that you could make. You could buy calls, you could do cash secured puts because it is a cheaper stock. So having the money for a $12 or $11, 100 shares of that is reasonable if you want to sell puts in it, cash secured puts, the sort of thing you could do since it's not a super expensive stock. Beyond that, if you want to learn more about these types of strategies, you can check out the link on this page for Option Floor Trader, which is my introductory service. But I also talk about these sort of things and educate on options. So that's everything I have for you.